What a session! Stocks chopped around, tech got hit harder, and the 10-year yield popped again. In this quick market recap, we'll break down SPY, QQQ, and the 10-year TNX, what the intraday move is telling us, and what traders are watching next. Here's the vibe. Yields moved up, and the market basically said, cool, but we're not paying higher multiples today. That's why you see QQQ more shaky than SPY. Tech is simply more sensitive to rates. Let's start with SPY. On your chart, we see a clear drop mid-session, then a strong rebound. But after the bounce, price doesn't explode higher. It stabilizes and grinds sideways. What that usually means, buyers showed up on the dip, so there's demand, but the recovery failed to turn into a trend, meaning sellers are still active above. Practical takeaway for viewers: if SPY keeps doing this V-bounce then flat-line behavior, it's a market where momentum trades are harder, and patience and levels matter more than chasing candles. Now, QQQ had the same story, but more dramatic. A deeper flush, then a snapback, then a choppy sideways finish. That's classic rates pressure the long duration stuff. Tech investors are basically asking, are yields going to keep climbing? If yes, QQQ usually feels it first. What to watch next? If QQQ can't reclaim its intraday breakdown area quickly, then the bounce is just short covering, not a real trend reversal.
Now the key chart, 10-year yield, TNX, your screenshot shows it pushing up and finishing around 4.23. That's a meaningful move. Why this matters? When yields rise, discount rates rise, and the market becomes less willing to pay for distant future growth. Again, that hits QQQ more. Simple way to say it in the video? Even if nothing bad happens, higher yields alone can cap stock upside. Across market commentary today, the theme is consistent. Investors are balancing earnings optimism with rate pressure. And the good news in data can sometimes be bad news for stocks if it pushes yields up. A lot of market talk also highlights how big earnings headlines and macro expectations can pull price around intraday. You get those sharp dips and recoveries that look emotional, not smooth. So here's the clean plan. If TNX keeps climbing, expect QQQ to stay more volatile. If yields cool off, tech usually stabilizes fast. On SPY, watch whether rebounds start turning into higher highs. That's when the market shifts back into trend mode. If you want, I'll keep doing these daily with the same 3 charts, SPY, QQQ, and TNX, because this trio explains most of the market mood in 60 seconds.